Hi, this is Mac with PriceActionTradingSystem.com, and today is Friday, March 2nd. This will be our chart lesson, and I'm not uploading this till Saturday. I had some problems uploading yesterday, and the file failed, and I'm just now getting a chance to upload it. I actually had to redo this on Saturday morning. Normally, I probably would have just not done a chart lesson today, but I just did another quick rehash of yesterday's chart lesson, and I'm going to upload it real quick. I know a lot of you like to study these over the weekend, so I hated that I didn't get one out on Friday, so I'm just going to go ahead and do it again this morning. And not sure what happened to the file, but it got corrupted somehow, didn't upload, and then I couldn't even get the file to work after that. So hopefully there's not something wrong with my software, and this one's going to work and not be a waste of time. But that's the reason you're not getting this till Saturday morning today, because I had a little bit of problem yesterday uploading the file, some kind of corruption in the file. And I don't know if it was YouTube. It must have been on my end, because when I tried to play the file on my computer, it would not play. So I don't know what I did wrong or what happened, but I'm hoping it was just a temporary glitch and that we're going to be good to go. But let's get started. I'm going to make this quick. It's Saturday morning, and I just had a few minutes, so I thought I'd redo this real quick. It was some pretty good trades yesterday. It was not a great trading day, but we had some good down movement, and so I wanted to show you what I was looking at. And you can kind of see this was the trading range from Thursday, this area right in here, and it really just carried over into Friday. It got a little bit tighter than even it was on Thursday, but the overall, I wouldn't say this is necessarily a strong trend or a good trend, but the bias for now is downward. And we had this nice move down in the overnight, then we had a two-legged correction, and then we had the second leg. And we're always talking about measured moves and how I measure these, and let me just show you this real quick. There's leg one. You can see that, and if you measure that and bring it over, there's leg two, and it's almost the exact same distance. And pretty much that's kind of the standard MO of how prices work. And you can see in the middle there was one leg up, two legs back, and then another leg up, and you see it's a nice measured move, and you had a two-legged correction there. So this is just a two-legged correction in between this leg and this leg. And so learn to kind of spot that. It takes it takes time, and you probably won't see that. The average person may not see that right away, but that's what I was looking at. And there's always two legs in there. Sometimes they're hard to find, but generally there's always two legs in there, and generally they're going to be close to equal legs. And if they're not equal, it's telling you something too. If they come up short on a down move, then prices are probably stronger than you're expecting. And if they come up short on an up move, prices are probably weaker than you're expecting. And on an average, most of the time you'll get an average equal move, just like we did right here on these. This leg here is about equal to that leg there, and then in the middle of that's two legs. So just remember that we're always watching for two legs, and of course it's easier to see them after the fact, so you got to learn to, but over time as you study this, you will start to pick this stuff up in real time, and you'll start questioning yourself, like on this right here, was that two moves up? Was that two moves up? And then all of a sudden those prices will start moving down, and you go, yeah, I saw that. I wasn't sure, but I saw that. So that's the kind of thing you want to look for. Just keep studying your charts, keep studying, keep looking for it every day, and over time you'll start to spot it. But I'm going to show you the trades that I marked yesterday, the trades that I liked. And a lot of times the first few trades that you'll see marked are my actual trades, and generally I always try to mark those and just show you what I was seeing. And there's always trades in here that I don't mark, so don't forget that. But we had this overnight low right in here that was just equal to the bottom of the range from the previous day, and so that's an important area. And so when prices, I was looking for prices when they came off here to come back down and test this. You could see they were a little bit stronger, and they didn't quite get there. And then we had this nice leg up. So there was a long right here. If you saw this trade off this double bottom, I didn't mark it because it was coming out of all this congestion. We didn't quite get down to the previous low. but you can see we went a little higher this time, and the bias was down, so I was generally looking for shorts, and that's why I didn't mark this, although there was a long right here. But this was the first trade, really decent trade of the morning. This trade was, the reason I didn't like coming short out of here is because of all these overlapping bars, all these dojis mixed in here. Generally, these trades will fail just like it did. Generally, they won't go as far down as this one did. Usually, they'll probably go to about right here and then reverse. And so that's why I didn't like that short. If you took it, you know, it's iffy because it is coming off a double top when the bias is somewhat down from the overnight. So if you took it, that's okay. I didn't mark it because I don't like the trade. And you can see prices didn't, even though you would have got a scalp out of that, prices didn't really go anywhere. I like this one because it's a double top pullback. Here's your double top. Prices went lower. We pulled back and we couldn't make as high a high. And then prices went lower again. And you got this bearish bar. So I like this one to the downside. And you can see all it was good for was a scalp as well. And then prices went in this congestion. But you could have gone long out of here. I wanted to take this trade. I talked myself out of it. And but that's the way it goes sometimes. And it was a nice move up. But we got a chance to get short again right here. And this trade was similar to this one, but look how this one's a little bit different. And, you know, this one was iffy because of all the overlapping bars. But let me show you the difference between this pattern and this pattern right here. We've got an established broader double top here for one thing. So this is a failed break higher. And prices tried to go higher right here twice. And notice over here you got dojis and all the bars are overlapping. They're not sticking past each other very much. Well, here, this one's, we're still trying to go higher, and we tried to go higher twice and failed, and then we tried to go higher one more time. So that was a good short right there, simply because we had this break higher. That's a failed break higher. This was so it's a trap to a degree, and when we tried to go higher right there and couldn't break above that bar, that was not a good sign. So I was looking for prices to probably come down, back down to at least here, but this started a downtrend, and we had this nice downtrend, a little channel for the rest of the morning through about lunchtime. But even if you didn't get your trend line here, let me just show you something. You don't always have to get these trend lines exactly right. If you just get them close, you're generally going to be okay. If you just drew it off the first two swings like that right there, you still got the gist of the downtrend. And you still should have seen that this move right here. And again, this is just a repeat. This short right here is a repeat pattern of this right here, just a little bit higher than before. And by this time, you could see those two legs. And this was an obvious strong resistance area. And it's kind of left over from the day before, right across there, same area. So we know we've been getting strong resistance in there. And when we couldn't get back above that high there, that's just a breakout. This is a second entry short right here, pull back to a trend line, and I actually started this trend line out here. I don't know if y'all saw that or not, but if you should have had that trend line drawn right there. It's a pretty good angle, and you see that was a perfect test. But even if you didn't have that trend line, you should have had this resistance line here and known that we had resistance right in this area right in here. And you can see that's a perfect retest on the breakout and then prices. So that was one of the best moves of the morning to the downside other than this move up that I missed right here. And this is the same thing here. This is just a pull back to the EMA and the trend line. The prices, you know, the market's going lower. And if you didn't take this one too, I could see why you might have got fooled a little bit. But we had this trap. See all these matching highs across here, and then we broke one tick higher, couldn't go any higher, came down here and closed on the end. Then we tried it one more time, tested that trend line again, and then it was off. So you could have gone short here, but if you didn't go short right here, definitely on that bearish bar right there, that was a good short because there's still enough room to get out before you get down here. And that was a nice move down right there. But it's coming off that trend line, and no matter how you had that trend line drawn, you still should have seen that. And then notice down here where we had support before, now prices are below it and they can't get back through it. So now we got resistance down here. So, and the trend has been down. So when we broke higher and reversed, that's really another two-legged pull back to the EMA in a downtrend, and that's one of our best patterns. And all I did with this line right here, I just copied it and drug it down to these lows, and you can see it. You probably originally would have had it here, but still you could tell these were just failed breaks lower, but I believe the channel was more down here. As the day progressed, you could see that. But this was a nice, this is another double top, triple top here where prices broke higher or failed. So you had several reasons to enter this. It's a two-legged pullback to the EMA. Let me show you this in case you can't see it. We came off this low. There's your first leg up. There's your pullback, and then there's your second leg up. So that's a perfect two-legged pullback to the EMA. That's one reason to enter with that nice bearish reversal type bar right there to go short below. Second reason was this support was now resistance, and we broke above it and failed. We also broke above these double, triple tops across here and failed. So there's a lot of trap longs trying to get long off these lows right here. And boom, there you go. Nice little scalp down again. Then we came back and we tested that same area again. So even if you didn't have the trend line, you had reasons to enter. This is just a repeat of this right here. But it is another test to that trend line. It's another test to this resistance area. So remember, when you have former support and then it starts acting as resistance, then it's going to do that until it acts as support again. You're looking for shorts. So as long as prices keep staying below here or keep failing when they break higher, then we're looking for shorts. And you see it finally got above here and it held, and then look, prices went higher, although they did fail and come back down and test it again. And that's generally what will happen. It'll test this multiple times until it decides that, hey, it's support again now, just like it tested it a bunch of times trying to get below it. Look at all these times it tested trying to get below that level across there. And it finally got below it, and it finally held, and so those are good shorts. And I didn't like this one because prices were outside the trend line. We were back above the EMA. There's a bunch of dojis in here, and it did fail. If you took this one, I can understand why. It was tempting, but if you did, it just turned out to be a trap, and prices went higher. And what you got to do when you're pulling back to the EMA and it starts holding, it's the same thing. See how the EMA is just like a moving trend line, but look how the EMA was holding prices on this side all the way, and then finally we start to get above, and then we make a double bottom right here, and the prices are holding above the EMA. That's not a good sign. And you can see it held again, and then right in here it's trying to get back below again, but it's until it starts to hold and prove that it's going the other way. So that's why I use that EMA. It's just kind of like a moving trend line. And you can see really from early in the overnight that thing was kind of holding as resistance. We got above it here, but look, it didn't hold. It came right back through, tried it again, and still kept holding. So keep that in mind too about that EMA. And we'd had a pretty much a measured move here too, so that was another clue that prices may reverse right here. So but anyway, that's why, and it was late in the day here, so I didn't mark any of this. It's too late in the day to be trying to take a chance on these trades. And this probably was a good short right here, but look what time it was. It was well after 2:30. Just not worth the risk that late in the day, because if you made your money down through here and then you get on the wrong side this late in the day, you give it all back and you don't have time to recover. So, or if that's your first trade of the day, it turns out to be a loser because you're on the wrong side, and then there's no time to recover from it. So, I mean, you can recover from a early mistake early in the morning because you got all day, but when it gets late in the afternoon and you make a mistake, you're probably toast because you just do not have time to recover before you have to be out before the close. And there's benefits to day trading, but one of the negatives is that eventually the later you get in the day, the less time you've got to be out by 3:15 as a day trader to maintain your day trader status with your margins and so forth. And most of the most of your brokers are going to require you, if you don't get out by 3:15, they're going to take you out around 3 o'clock, 3:05, somewhere in there. And I've made that mistake. It's been a long time, and I hope I never make it again, but just not paying attention to what I was doing, and the time slipped away, and next thing you know, the broker's taking me out of my trade. But that's a good thing, because I don't want to accidentally get carried over to the overnight and lose my day trader status and have to fork up full margin for 5 or 10 contracts. So there's benefits, there's pros and cons to that, but that's why I don't like trading in the afternoon. You'll hear me talk about that every now and then. I just don't trade much after. I don't really even like to trade after lunchtime, 1 o'clock. But definitely 2:30. 2:30 is my absolute cutoff. Now, if I'm in a trade, I might carry trade right to the close. If I'm in a trade and it's moving, if I got short down here and prices are moving in my favor, and we're heading higher at 2:30, I might hold on to that trade. I'm just not going to enter any new trades. So don't get mixed up on that. There's nothing wrong with with a trade that you entered earlier that's going in your favor, hanging on to it, because sometimes right before the close you'll get these huge moves and prices might run from here all the way back up to this high in just 15 or 20 minutes. And so there are some good moves. Just don't enter any new trades. So, but hopefully you had a good trading day, a good trading week. I'll see you again on Monday, and we'll wrap this one up. This is Mac with PriceActionTradingSystem.com.